And now, the moment you've been waiting for all week, Courtney Smith's weekly video newsletter, TradeSmith.
The word of the day, homeostasis. Yes, you didn't know you were going to get some edumacation here, but I'm going to edumacate you. Hey, everybody, Courtney Smith here with TradeSmith, our weekly. It's going to be a special edition here because of all the market volatility. So what is homeostasis? Well, back when I first started trading back in the early 1970s, there was an old expression that the cure for high prices is high prices. And what that simply meant was that if, let's say, the price of corn got up to $5 a bushel, which would be a very, very high price, particularly back then it would cause people to grow more corn, thus increasing the supply. Then, as the supply increased, we would then see the price fall. If it got too low, people would cut back growing corn. And so the supply would be reduced, and then the price would go up. So that what happened was that the price of corn would oscillate around a middle point. That's called homeostasis. Another good example of that we're all very familiar with is the thermostat in your house. We set the thermostat at 72. If the temperature goes above that, it turns on the air conditioning to lower the temperature. If the temperature goes below that, could turn on the heater to get it back up to 72. Well, that's what we have in the market. Yeah, you know this. You know who I am. You know where you are. You're so excited to be here. I'm glad you're here. And of course, this is the high point of the whole presentation. All right. A lot of things have happened in the last week. Incredible things. So let's dive right in. A lot of arrows on here. First of all, obviously, the market came under a lot of pressure. In fact, we saw the market decline just barely over 10% before rallying higher. That means that the market officially got into correction territory. A correction is defined as when the market drops 10%, a bear market when it drops 20%. We got finally our first correction in a couple of years, which is really very remarkable. In addition, the volatility of the market returned to normal levels after the incredibly low volatility of the last several years. Now, several things on this chart, and I'm going to take just a little while before I tie it all together because there's so many factors here, but I'm going to have a very dramatic call for you in a few minutes. First of all, the top arrow shows that the purple predictor has hardly dropped at all. In other words, what's happening is, in spite of the market dropping, the smart money is coming into the market and taking advantage of this dip to buy. You see, after the market has dropped 10%, that means that there is better value in the market. So if the market was somewhat overvalued before, it's not somewhat overvalued anymore. This is homeostasis. If the cure for high valuations is lower prices, we got the lower prices and brought us back to normal. So this was actually very good for us in the stock market for the long term. Not so hot over the last couple of weeks, but very good in the long run because we've cleared the decks, created value, and now we can have the stock market rally significantly. I've already told you there will be no crash. We will not see a bear market. We will not see the market drop 20%. But the middle arrow, the horizontal arrow, is where I told you that I thought the market would go to, and that was spot on. We got just a little bit below that, but on a closing basis, that was almost a perfect call. Now, the other thing that I talked about last week was the arrow down at the bottom. I told you that I was very much on the alert for what we called a bishop liquidation signal. And what that meant is that if the ADX, which is way down at the bottom there, since it was above 40, if it turned down one tick, that would be the high of the market. Guess what? It was one day. It gave us a sell signal one day after the absolute high of this market. This is an amazing indicator. I don't use it so much here on TradeSmith, but in this circumstance, I felt it was necessary to show you how to pick a top in the market, which it did perfectly. Now, I put the red arrow down there also to show you that it started to turn up, just barely. So I'm not going to be super conclusive about this. But when it turns up, it is a strength of trend indicator and suggests that this bear market, this bear move, this correction this bear move is actually gaining strength. Now that contradicts the purple predictor, but it is a bearish factor. And I like to be honest and open and give both the bull and bear sides. I have to look at the indicators as they are. I can't fantasize about them. All right, let's carry on. Now, I also want to show you this chart here. This shows the S&P, and it also shows you the green line is the advanced decline line of the S&P. But what we've done is we've eliminated all of the bond funds and things like that, so it's only common stock. Now notice down in the lower left-hand corner that the green line accelerated in September to a much faster degree than the actual S&P. Then the green line, the AD line, went sideways all the way to November, but the S&P just kept grinding higher. But notice what's happened over the last month through January is that the advanced decline line was moving higher, but at a much slower rate. The S&P rallied sharply and caught up so that the green line was no longer leading the market. Now let's take a look at so my point simply is that the AD line was really the leading indicator for the stock market, leading or coincident. Now look at it where it is now. The AD line has come down just as the S&P has, but it's come down only about half as much. In other words, it's showing a lot of strength. It's saying that the average stock didn't go down 10%, but maybe down 5%. So whereas the S&P 500 is dominated by 10 or 15 companies, the AD line includes all 500, so it's a better representative of the average stock in the stock market. That's bullish. It shows that this market really isn't as weak as the big indexes show us. So this is very insightful, what I'm showing you. All right, Dow Jones, also fascinating. So let's look in the upper right-hand corner. And once again, we see the DI plus remains high and above the DI minus, the red line remains above the green line, which is DI plus. And we showed this to you a week or so ago, that the selling pressure was higher than the buying pressure. But notice that both the red and the green lines are basically horizontal now. In other words, we're not seeing an increase in the negativity. Now, once again, the black line shows the bishop sell signal, and it called the market perfectly. Perfectly, it called the high. This is amazing stuff that I'm showing you here. I hope you appreciate you can't get this information from anybody else. We look at the market in a unique way, and that's why we had the best performing stock newsletter for 5 years in a row, because we do things differently. So right now, our analysis of the buying selling pressure is that there still is more selling pressure than buying pressure, but it's not getting worse. Let's take a look at the Dow Jones from another perspective. Here we've got the purple predictor. This one's even more dramatic. You can see that the purple predictor in the upper right-hand corner has barely dipped, showing that the smart money is coming into these big Dow 30 stocks, and yet the Dow 30 stocks have come under pressure dramatically and have dropped a tremendous amount, but the purple predictor shows that the on-balance volume is just down a smidge, maybe just a smidge of a sliver of a microscopic move. Okay, I'm exaggerating, but you see my point. My point is the smart money's buying this dip. They're not selling. All right, the NASDAQ also, same story, except once again, we got the purple predictor much stronger, suggesting once again that the smart money is buying this dip. Seasonality, oh my God, look at this. Our seasonality indicator, we changed to bearish last week. But I pointed out that the purple predictor was not down very much. Well, let's take a look at it this week. Oh my God, It's in a mini bull move. So what's happening is that we're seeing the smart money coming in and buying these small cap stocks. Now, one thing that's important to recognize is that generally speaking, in January and February, we see small cap stocks do better than the average market. And what we're seeing here is, in fact, that the smart money is putting their money into small cap stocks. They're not only not selling them as much, they're actually buying them. So whereas the IWM is still moving lower, we're seeing that the on-balance volume is moving higher. Now, when you see a divergence between the purple predictor and the price, you should bet on the purple predictor being the correct analysis. Very important. Okay, so here we are. We got this dip, and I guess this is really the January dip, but nonetheless, we did get the dip. But the seasonality remains very, very bullish until April. So as a background factor, we got to say this is a positive. The yield curve, not really much of a factor. It's really sideways through January and February. So we'll leave it at that. This was a fascinating thing to me. Asset allocation between stocks and bonds has really been neutral. So as the market has been plunging, we're seeing also the bond market. So where's that money going to? We see gold going down. We see bonds going down. We see stocks going down. We see Bitcoin going down. Where's the money going? It's going into cash. They're putting their money in cash. That's right. Folding money. $20 bills, maybe some short-term treasury bills, but they're not buying bonds. They're not buying stocks. They're not buying Bitcoin. They're not buying gold. They're buying U.S. cash. U.S. cash. They're not buying Japanese cash. They're not buying German cash. They're not buying British cash. They're not buying Canadian cash. They're buying U.S. cash. That's where the money's going. The ultimate safe haven. Now, the stock market risk indicator is actually going down. So, but not very much. It's not saying that they're really, really running for the exits. And as we saw, the smart money's actually coming in and buying. So this is actually kind of a bullish factor. Global shares, similar story. Bonds dropping sharply, as we discussed last week. Purple predictor, though, is actually weaker than it was last week, which would suggest that bonds could go lower, except for our bond key factors. Now, last week, they were all telling us that we're going to have higher interest rates. But look at what's happened here. Let's take a look. The green line is the 10-year Treasury yield. Notice it hooked down a little bit. At the same time, we saw the blue line. That's 10-year Treasuries in Germany. It hooked down a little bit. Not enough to say that the trend has changed, but it's kind of interesting. Why is it interesting? Because look at the gold line. That's the price of gold. It hooked down before the interest rates hooked down, and it hooked down more. And then look at the chart down at the bottom. That's the CRB. That's commodity prices, a leading indicator of bond yields, and it came down hard. So the bearish situation for bonds might be turning. Remember, the cure for low prices is also low prices. Now, I want to come back to this homeostasis theme. Because with bond yields spiking up like this, if we say that the cure for high prices is high prices, when bonds become, the yields go way up, then lots of things happen in society. Commodity prices go down, the dollar goes up, the stock market goes down. Well, if all those things go down enough, then bond yields start to go down as well. Homeostasis. So let's take a look. One of the key factors here is over the years, it started out with the name called the Greenspan put. Alan Greenspan came in as the head of the Federal Reserve Bank in 1987, and promptly the stock market dropped 40% in one day. Well, this was the first crisis of Alan Greenspan, and how did he respond? Was by massively easing monetary policy. And so it became known as the Greenspan put, which basically is that the market I left something out. Greenspan, then in 2000, and Bernanke and Yellen, every time the stock market dropped, they would ease monetary policy. And so the easing monetary policy would cause the stock market to go right back up again. So if rising interest rates are causing the stock market to drop, as I believe, you will see, I believe, the new Fed chairman, who just started on the job this week, he's going to ease monetary policy this week. And that will cause bond yields to come down and the stock market to rally. Now, I'm going to come to a conclusion here, but let me go through the rest of our things here. The dollar is up because of the bond yields. Also, flight to quality. Look for the dollar to peter out here on this rally. Gold coming down. Rising interest rates are bad for gold. I told you we get down to 13 and very small change. We basically reached that on Thursday. The gold indicators, which had been bullish, are now actually slightly negative, and I'm actually getting more bearish on the gold market. I don't have a position because I'm not looking for a huge move, and I really like to get the big money on the big move, so I'm not really trading gold right now. Oil has come under pressure with mostly all other commodities as well. So this is a very, very big change in the marketplace. Okay, Bitcoin. Bitcoin got a little bit of a rally here. A little bit of money came back in. You can see there's a big downtrend line that's capped prices. I actually am getting a little bit bullish on Bitcoin for the very short term. That line right there is the critical line. If we break above 87 or 8,800, we might get a little bit of a move up to 11 or 12,000. I'm still very bearish on it. Still, we got down to almost my $5,000 objective. I think we're going to probably get down closer to 4,000, something like that, maybe 3, because the cure for high prices is high prices. All right, another chart. Okay. You know, I'm just going to put this on the screen while I go through my conclusion. The stock market came under a lot of pressure. It got a 10% decline. But as you can see, there's a number of factors which are turning around. I believe that the stock market has reached a low. And I'm going to make the very dramatic call that I believe that we're going to see bond yields come down a little bit later in the week. We're going to see the stock market rally, maybe not back to the old new highs. We have to see how it goes, but that this 10% correction is now over. I want to be on the side of the smart money, and you can see over and over again, I talked about the smart money. In addition, markets don't go in one direction only. So we should see some type of a rally, maybe a 3 to 5% rally off of the lows, maybe a 5% rally off the lows. And then we're going to sit down and then I'm going to reevaluate the situation. Now, our fully paid up members, I've got a strategy on how to make money on this particular rally. And I'm going to show it to you in a minute. For freebies, of course, you should subscribe so you can figure out, so I can show you exactly how to make money in these markets. All right, this is very, very important. Keep cool, everybody. It's just a market correction. It's no big deal. Except for the last year, they happen all the time. There's definitely not going to be a crash, definitely not going to be a bear market. We went into detail on why there wasn't going to be one last week. So just keep cool. Now, always, though, use proper risk management. You should have really very few stocks in your portfolio right now. You really should be mainly in cash. Fully paid up members know that I'm basically all in cash right now because I knew that this dip would not be long-lived. So it was going to be very difficult to make money on the short side. At the same time, we need to be starting to position ourselves for the next big move. And the next big move is going to be up. All right, everybody, all you freebies, love having you here. Keep cool. And we will talk to you next week. Fully paid up members, hang on just a second because I got some more deep insights that you can only get at TradeSmith. Hey, Courtney Smith here, and I want to tell you about TradeSmith, our video weekly newsletter. Yeah, I've been bringing the hammer to the market for over 45 years, and now I share that expertise with you every week in a terse, to the point video newsletter. Now, see, back in the old days, I actually ran the #1 stock newsletter in the United States for 5 years, according to the Hulbert Financial Digest. I crushed the market. I went where the action was, and for 5 years, when I did this newsletter, it was the #1 rated most profitable newsletter there was. There's a picture of it. In addition, I also ran the #1 mutual fund, growth mutual fund in the United States. There it is. There it is. There's Morningstar. Look at that chart. Ooh, that's a beautiful looking chart there. And I was #1. Well, and no losing year in 40 years. I've been doing this for a long time, and I want to share that expertise with you so that you don't have to go through 40 years of experience. Trust me, I bled a lot in those 40 years, but what that means is I've led a lot, and I've shown tens of thousands of people how to make money in my career. Now, first of all, in this newsletter, we're going to cover the key markets. We're going to talk about the U.S. stock market. We're going to talk about global stock markets. We're going to talk about foreign exchange. We're going to talk about futures, even commodities, oil. We're going to talk about bonds so that this is a one-stop shop. You can come here. You don't need anything else. We're going to use options whenever we have the opportunity to leverage up and turbocharge our profits. We're going to do it. Now, this is totally unique analysis. You think that if I did what everybody else did, I would have those #1 track records? Of course not. What I have to do is unique. That's the only way you can beat the competition out there year after year after year. So, deep fundamental analysis. I'm going to talk about this on 2 levels. First of all, fundamental analysis of the markets, monetary policy, economic policy, trade flows, all of those sorts of things, but on a very, very deep level. I've studied macroeconomics for decades now, and I've been using that analysis for decades. In addition, we look at deep fundamentals of individual stocks when we look at our stock market trades. That is to say, we're going to tear apart these companies. I focus a lot on a few key metrics. One of them, strong earnings growth. In the final analysis, that's the thing that really drives stock prices. Another factor that drives stock prices is when earnings per share estimates are going up. That is to say, when a broker changes their estimate from 10 cents a share to 20 cents a share, they call their clients buy the stock, and the price goes up. So those are the 2 most powerful techniques that affect the price of a stock. And I'm going to tear that apart and show you why I love these companies. But at the same time, just because it's a great company doesn't mean it's a great stock. We need to be able to time these things and buy them when it's good to buy and sell them when it's good to sell. So I'm going to show you unique technical analysis you can't get anyplace else. It's a combination of a number of indicators. Some of them you might have seen elsewhere, but I use them in a unique way. Others, you've never seen them anyplace else. I'm the inventor of those techniques. But you know what? Even the techniques that I use of other people, I use from people who are friends of mine. Yes, I've been around this market so long that most of the greatest technicians in history have been friends of mine. In addition, I'm going to show you ninja trading tactics. How are we going to get the best fill? How do we enter the orders? Are we going to use stop orders, or are we going to use limit orders or market orders? All of those sorts of things I'm going to give you in our weekly video newsletter. Key benefits of the newsletter. #1, killer analysis that you're not going to find anyplace else. This is unique. This is unusual. And I have to make it unique. I have to make it unusual because that's the only way I can be #1. By the way, I was voted #1 bond and gold market timer for 3 years in a row by Timers Digest. You can only do that when you have unique and killer analysis. Killer trades, because once we've got the analysis, we need to make money from it. We need to turn it into an actionable item, something that we can actually do in the real world. So I'm going to give you killer trades. I'm going to tell you specifically where to buy, specifically where to sell.
Nothing is left to the imagination. I'm precise. It's also to the point. I don't want to waste time. I don't want to waste your time. I don't want to waste my time. So no BS, no stories, no jokes, no nothing. Right to the point. Here's what to do. Here's why to do it. And here's how to make money from it. So I'm going to keep it terse. It's about 20 minutes per week, right to the point with all the analysis. I show you the charts right on the screen so you know exactly why I'm doing it. You can double check my work. If I show you an indicator and I say this is what it means, I'll show you the recent past and you can see if it worked recently. Of course, it does. Now, actionable. That's a key thing. So many analysts out there, it's blah, 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 blah. It seems to me that all they want to do is they love the sound of their own voice. They want to sound smart. You know what? I don't care if I sound smart. That's not the point of the exercise. I'm not here to try to impress you. I'm here to help you make money. I'm doing all the same trades that I recommend to you. So trust me, they better be profitable. Easy. Like I say, I'm going to give you the exact entry, exit points. It's going to be super easy. Just type them into your brokerage platform, and there you go. It can't be any easier than that unless I came over to your house and typed in the orders myself. It's only $47 a month. This is a peanut for what you're getting. This is killer analysis, killer trades. This is something where, you got to stop and think of it this way. Can I make $47 more per month if I subscribe to this newsletter, or am I not going to make $47 per month? You know the answer. The answer is, of course, you're going to make at least $47, probably 10 times that, probably 100 times that, probably 1,000 times more than the $47, depending on the size of your account and if you follow all of my trades. So also, I want you to have a lot of free bonuses right up front. As soon as you sign up for the first month, I'm going to give you thousands of dollars of free bonuses. A lot of them are options related because I'm an owner of a company called Options University, and we've got some great education there from option beginner to pro in just 4 nights. I like using options if I can because they can turbocharge the profitability. They can also be used to cut risk at the same time. That's a pretty awesome combination. So I'm going to give you from options beginner to pro in just 4 nights. Great introductory course for an option beginner. I'm going to give you how to quickly and easily master the top 20 technical indicators, some of which I use, but of course, as I say, I often use them in tricky new ways, and I'll show those to you as well. Retire rich with 10x income. I love this course. Really, isn't that what we all want, is to retire rich? And hey, why retire rich? How about retire rich and early with 10x income? This is an awesome course. You're going to love this course. It's going to get you focused so that you can retire rich. The secret is out with gamma trading. Now, this one's more advanced. I'm not kidding you with this. Gamma trading, I used to be an options market maker in the institutional world. I didn't deal with retail customers, only with banks. And what did we do? We did gamma trading all day long. It's something that's so super sophisticated that very few retail investors ever really understand it. This course gives you the insight into how to do this sophisticated technique. So we started from option beginner at our top bonus. This one, advanced and very super cool. Another one is, I love this. Come on. We're going to give you a new option strategy every month. So what's going to happen is you're going to receive a new option strategy every single month for 12 months, give you a month to master the strategy for the month, and then learn a new one, and then learn a new one. This is a great concept so that you can learn in a relaxed fashion. Gotta love it. I'm also going to give you 82-page manual on candlestick secrets. This is a particular style of trading, using, instead of bar charts, using candlesticks. What's cool is it's got flashcards. It's really very cool because you actually get to learn just like you did when you were a kid. So it makes it super easy. You can be studying while you're sitting there on the subway or whatever, looking through those flashcards, the tutorials, the manual. It's awesome. And then finally, a very secretive part of the universe, foreign exchange options trading, where we combine foreign exchange trading with options trading. profiting from the two hottest markets. So I'm giving you 7 bonuses here. The value, if you were to go and buy those, go to optionsuniversity.com. Check them out. You'll see the price is just under $2,200. So when you sign up for just $47 a month, I'm going to give you these 7 bonuses right away. You're going to be able to access them right away. So let's repeat. You get the weekly video briefing with actionable advice. You get the 7 valuable bonuses, and all for just $1.56 a day. Come on. Really? You don't think it's worth less than $1.56 a day? Come on, man. You can't get a Starbucks coffee for $1.56, but you can get one of the best video newsletters ever. In fact, I believe it's the first video newsletter ever. But you're getting the same insights and the same techniques that I use to build that incredible track record of being the highest performing, most profitable newsletter for 5 straight years. All for $1.56 a day. This is a peanut. So what do you got to do? It's simple. You go to bit.ly/weekly market forecast. And yes, the W and the M and the F have to be capitalized, but go to bit.ly/weekly market forecast right now to subscribe, get involved, full money back guarantee. Of course, do it right now. You're going to really enjoy it. I'm not allowed to promise you that you'll make money. The SEC, the FTC, they'll come down on me like a ton of bricks. But I know what my track record is. I think as long as you follow the advice, I think you're going to be very happy. I'm allowed to say you're going to be happy. I'm not allowed to say you'll make money or they'll come down on me like a ton of bricks. We don't like that. So here's what I need you to do. Go to bit.ly/weekly market forecast with the capital W, M, and F right now. Go there right now, check it out, sign out, full money back guarantee, get all the bonuses, try it for a month. I know you're going to love it. Thanks very much, and I'll see you on TradeSmith. Thanks very much. Bye-bye.